Welcome back to another good old closing live stream where we get to do an earnings together. Today we're going to do the Nvidia earnings report and the earnings call, if it's not too late, which I don't think it will be. I think the earnings call is at like 2:30, so it's like in 90 minutes or so. And then the actual earnings come out in about 30 minutes. Taking a look at the market here, you can see Tesla's bouncing between 179 and 178. We've got Enphase that's run up about 8%. It's been bouncing on some of these lines and moving all over the place here. We got Bitcoin down at about 69.3 and SunPower kind of bleeding out a little bit. But the story today is going to be all about Nvidia. Nvidia moving down 1.2% here going into the good old close. So we're excited to see what's going to come from these earnings. I think a lot of people are anticipating this as potentially a pivotal turning point in L market. So kind of excited. I don't know what's gonna come out of this. Hopefully you were able to have some delicious trading today. Hopefully you were able to make some money. And we'll see what happens with good old Nvidia earnings. So we're going to go watch the close here. We've got about 8 minutes to go. Looks like Williams Sonoma really turned down there, about 11.6% down. Then you've got the Qs rotating down about 38 basis points. Volatility index today nicely up 4.22% despite this downtrend we've been on. And Tesla 4% give back. Yesterday we did break out of that 178 level, and we basically just bled that all the way back down, right back to 178. Yeah, sorry about that. Yeah, this. What was I going to say? Oh, I wanted to see how some of the other AI plays are moving. So Nvidia down about 1%, trying to recover a little bit going into the close there. And then let's go to, let's see, that's Nvidia. How about SMCI? This one's down 3%, and then we've got Vertiv. That's sitting there at 99 bucks. So obviously, big day today. Excited to see what these numbers are. And their numbers come out at 4:20 Eastern. And that works out to 1:20 California time. We do have some other earnings that we'll cover as well today. So we'll have Elf Beauty will be out at 4:05. We'll also have... it looks like we will have Snowflake. Ooh. Let's see how those SaaS revs are going to move. So that'll be fun. Let's see. Okay. We have... Okay, yeah, I'm going to get these up. Okay, so Snowflake, and I want to see what the expected volatility is on that one. I don't know why, but for some reason I think it's going to be pretty big. Let's see here. Snowflake. Earnings. So the volatility for Snow is expected to be 9.6%, actually less than the usual. Stock's trading at 162. Looking out on the week chart, wow, look at that. It's really following this trend pretty nicely right here. So this is going to be it. Are you going to break through this level, or are you just going to take off and rocket off from it? Some potential upside going all the way up to maybe as high as 242, frankly. But you did have some serious selling over here in, looks like, March. I wonder what happened. Let me see here what happened to Snowflake. That's wild, that sell down. I haven't been paying attention to Snow for a while. So, individual, let's see. Snowflake. Let's see what happened in March. CEO and chairman sell shares. Oh, multiple insiders start selling. Price target cut at Redburn to sell. Neutral to Guggenheim, although that's a raise, so that means they were a sell and they were moved to neutral. Executive swap Okay, so some interesting executive movements there over in the March time frame here that led to some selling pressure. I mean, it's pretty substantial. Let me see here. Oh, you had earnings over here. It just wasn't showing up. Okay, it was just earnings at the beginning or at the end of February. Oh yeah, look at that gap down you got on earnings. Holy smokes. You're down 18% on the last earnings. Yikes. All right, all right. Anyway, so that's Snowflake. So they'll be reporting 5 minutes after the bell. And then Elf Beauty will also be reporting. Expected volatility on Elf of today is a little higher than average, 12.29%. So all of these should be pretty big movers. Kind of curious to see that. Let's see. There we go. All right. Got those ready to go. CEO stepped. Oh, the CEO resigned. I didn't know that. Really? Okay, that's interesting. Nvidia needs to announce high price on Blackwell so we could see them crush it. Nvidia sellers were, or Nvidia insiders were selling all year long. How many minutes to Nvidia earnings? About 22. Frank moved to board. Yeah, okay. Let's see, yeah. Yeah, I just gotta be honest, I have not paid attention to Snow at all. But I see them as they were a big data play before everything was AI. That's pretty cool. So, okay, cool. Let's see here. Okay, yeah, well, let's see. We got the bell coming up in about 90 seconds. It's gonna be pretty good, pretty excited. We've got the Nvidia earnings, again, about 22 minutes away, and we'll be covering, in the meantime, Snowflake and Elf. Snowflake might give us a little bit of a heads up as to what to expect for Nvidia to some extent. I mean, it's a level removed, right? But if their revenue forecasts are falling, then you would expect server and data usage to be falling, and then you would expect companies like, I don't know, an Amazon potentially to say, hey, we're going to delay some of our acquisition of more chips, which is kind of what they did do. And then sort of the growth curve kind of starts S-curving out a little bit on AI chips. So we'll see. Okay, brief listen here at Doomberg, and then we'll jump on over to get the bell on CNBC.
After the bell, and that includes some big earnings, Carol, out of VF Corp, Elf Beauty, and Snowflake.
Yeah, exactly, man. Those are so important. And then there's this other one we might get to if we have time. Nvidia.
Oh, I've heard of that.
Yeah, exactly. Listen, the expectations are high. We're going to see, we've had all these stories about that. There isn't enough supply to meet demand. The numbers, the metrics, the margins, this is going to be important. And the outlook, we were talking to our own Ian King, that's going to be important.
Okay, the outlook, the revenue estimate, $26.82 billion. This is the one that I'm focused on. Adjusted gross margin estimate. Scarlett, 75.6%.
Yeah, that's something.
That is just incredible. Yeah.
Ian shared with us, we asked for context around that number. He shared with us for context.
Oh, let me get the bell. I forgot. Almost forgot. There we go.
Upon us, the bell marking that about 20 after the hour, but you got a great setup coming with Morgan and John at OT.
There it is. Nvidia only ended down about 0.5% there going into that close. That's actually pretty impressive. It is at El Topo basically here. I mean, that chart setup is telling you, you're going right to 850, boy. Oh, man. It's gonna be chilling. But it should be quite entertaining too. Triple top, says someone in the comments. Yeah, no kidding. It does sort of look like that, doesn't it? Yikes. A lot of folks are looking for a big beat from Nvidia. Some folks are looking for a miss from Nvidia. Some folks are just excited to, frankly, get it over with. I think I'm honestly a little in the get it over with camp. I'm a little exhausted with waiting for these catalysts, and I just kind of like, just give me the catalyst so I can be over it and I can get back to trading. Some folks have their life savings in Nvidia. Yeah, it's been a good investment, so you can't blame that. It's certainly been better than Tesla. Oh, but good news is trading went well today. Let's see here. What did I end up with today? P&L for today, I think it was like 80K, which was great because I wasn't even trading with more than 80K at any given time. Well, I mean, like when market value goes up. But my last trade was like a 15K trade, and then I had a 35K trade, I think, and a 50K trade. And on those trades, actually, I think every single one of those was end phase, if I'm correct. We just played the lines on end phase all day long. Here's my P&L for today. So remember, if you want the buy-sell alerts, while I can't guarantee future performance, if you want the alerts of patterns that I'm seeing so you can learn how to trade on them yourselves, you could make money, you could lose money, that part's up to you. Do check it out over at the Stocks and Site group over at meetkevin.com. Next coupon expires next week. I think it's next week, Friday. So you have a little bit of time. So you have questions, email us at staff@meetkevin.com. And yeah, no pressure. But anyway, it's been a pretty good trading week. I like it. The trading week's been freaking awesome. So 3 minutes until the first earnings here. And let me see. I wonder what my year to date is now in the trading account. Year to date. Y2D 868. Yes. And that was on $1 million account, so it's going well. Okay, good. Let's hopefully we can keep that going. Well, it really only started back in like March. Whatever. So Snowflake ends up green, up 36 basis points, 31 in the after hours. VRT hits 100. Look at that rally into the close. Woo! Getting some enthusiasm going into the close here. You've got let's see here. What is this? Here's Nvidia. But first we're gonna have ELF. I'm gonna put these up at the top. ELF Beauty. Been on a downtrend since about 221. You know, Ulta gave some bad outlook there at one point, and I think Ulta gave that bad outlook right around here in February, and I think that's what hit them. And then we'll have Snowflake, and then obviously we'll have Nvidia. Hey, I'm live right now. What's up? So, let's see here. Somebody says I made $1,000. Oh, congratulations. I can't verify your returns. Yeah, ignore after hours on certain ETFs. You have to be really careful trading in after hours. I almost exclusively do not trade in after hours. I break my rules sometimes, but almost always I don't touch after hours. It's too thin. But what is interesting is I will say I do what's it called? Something like Nvidia in after hours. Honestly, it'll probably have enough liquidity. VWAP settings, Savage, you just use the default. I don't even turn the bands on usually. Some people really like having the bands on for them. But anyway, all right, here we go. Ready for ELF and Snowflake on deck within the next 10 seconds. Was that Lauren? Heck yeah, it was. She brought me a coffee. Coffee. Just what I need. Oh, ELF Beauty comes in with 53 cents of adjusted BPS. That's a beat. 321 million in net sales versus 292. Big beat. Oh, and the stock goes down 6%. Of course, because it's the stock market. Snowflake beat. Nice. Snowflake's up 10% in after hours. Holy smokas. Oh, there it goes. There she blows. You've got product revenue coming in at $789.6 million. The estimate was $749. Q1 revenue in total, $828 versus the $786.3 expected. Product revenue forecast also beats $807.5 million. I'll write that down. $807.5 million divided by the forecast of $787.5. It's about a 2.5% beat on Snowflake's forecast. Very good. And then we've got Let's see here. Yeah, Snowflake's just absolutely climbing like crazy. I'm not sure what's going on here at ELF. I think must be the forecast. Oh, forecast misses. 1.24 billion versus 1.28 expected. 124 divided by 128 puts you at a miss of about 3%. So about a 3% miss on sales growth for ELF. And Snowflake just absolutely killing it here. Let's go to the investor relations doc and see if we can get the actual financials here on these quarterly results out now. Dun, dun, dun. I don't actually think we have them out yet. Come on, where's the news? There it is, May 22nd. Snowflake reports. Come on, where is it? This is, they don't have it on their website yet. This is quite annoying. I'm looking for their Q1 2025 is really what we're looking for here. And nope, not on their website just yet. So we'll have to get that in just a moment. Oh, there we go. Got it. Just appeared. Perfect. And I will, oh, it's funny. They give you their logo to download in case you want it. That's funny. All right, let me drop this into a PDF quickly so I can take a peek at this in detail and see exactly what we got going on. All right, here it is. So let's zoom in on this. There we go. Snowflake, 789.6 million of product revenue, and again, total revenue beat by that number 780. Sorry, what did I say? 789.6 beat over the 749 expected. 789.6 divided by 749 mil expected. That's a 5.4% beat right here. 5.4% beat on 749 mil product rev expected. Let's write that down so we have that right on our filing here. Yeah, then we've got net revenue retention of 128%. That's very good. Keep in mind, one of the reasons these SaaS businesses have the high valuations is because you get these additional sort of earnings over earnings of existing customers expanding. 485 customers with 12-month product revenue greater than $1 million. My gosh. 709 of Forbes Global 2000 customers. Jeez, wow. Let's see here. 33% growth. Okay, I want to actually look at the financials. All right, here are the revs. Yeah, I mean, that's a nice move in gross profit as well. And again, the forecast beat by 2%. Forecast beat by about 2% as well for, I think it was for the fiscal year, if I remember correctly. That was for Q2. For Q2 at 805 mil versus 787.5 mil. Okay, it's coming in, text is coming a little small there. There we go. That's a little better. Okay, so that's pretty good. What do we have in terms of gross profit growth, which will give us a little bit of a tell on margin as well. 556 divided by 415, 185. 34% on gross margin. That's really impressive. 34% growth on gross profit. That's great. Sales and marketing did grow. 400 divided by 338.5. We're about 21%. 21% growth on sales and marketing. Less than revenue growth of, wasn't that like 30 something percent? 828 divided by 623. Yeah, 32.9%. Very good, Snowflake. Let's go. That's very exciting. These are very good numbers. We've got an operating loss, unfortunately, though. So the company does operate at a loss. That's unfortunate. So, and that's because your G&A, sales and marketing, R&D, all of your expenses are way high, and your operating loss actually expanded. What the hell? How did your R&D go up this much? They're gonna tell us it's because of AI, I bet. Oh, that's a bummer. I don't like that. 348 divided by 290. Yeah, that's a 27% growth in operating loss. It's probably because they're paying out a lot of stock-based comp. I could see that in the cash flow statement, though. These are the reconciliations. I don't really care about that right now. I'm going to have to. They're not giving us the cash flow statement yet. Oh, wait, no, here it is. Cash flows from operations. Oh, yeah, there it is. $331 million of stock-based comp. So if you add that back in, they actually have an adjusted profit. 337 mil of SBC. So that is something that does weigh the stock down, is the sort of the amount of spending in sales and R&D and G&A that's coming from stock-based comp as opposed to, let's say, salary expenditures, right? Balance sheet, I'm not highly concerned about their balance sheet, but I will look at it really quickly. I'm at about, I'll call it 465 million in current liabilities, 465 mil current L's. I really need to bump this text up permanently. That's quite annoying. That's why. Okay, figured out. Okay, and then we have cash and short terms of $3.3 billion. 3.3 billion of cash and short term. And then if I look at longer terms, there's no debt. Oh, that's a nice balance sheet. Are you serious? No long-term debt. Let's go. I mean, you do have other liabilities here, but it's $39 million is basically, well, basically, rounds down to zero. Okay, that's very, very impressive. So excellent balance sheet. We've got cash flow, a lot of cash flow here, so you really don't have balance sheet stress. No balance sheet stress here. The question just comes down to, can you get gross profit to exceed this 904 millis? And you're growing gross profit at 34%, which is great. If I grow 556 by 34% again, and then 34% again, I become profitable. Yeah, I'd really have to grow it about like 2 times at this rate. I'd really have to grow for the next 2 years at about 30% without OPEX growing to actually become profitable. So it'll be a while. But this is very common of SaaS. But this is SaaS. So everything goes, I suppose. I don't generally love that, but you know, you're gonna get a multiplier of sales, so an X sales multiplier. Let's see what the cap is of this company. Snowflake stock. So this is a $54 billion company. It just increased about 8%. So it's about a $59 billion company. $59 billion company. I've got annual revenue of maybe, call it 4 bill. Well, I'll just call it what it is, which is 828 times 4. Make that a period. We're trading for about 17.8x sales. Not actually horribly uncommon. I regularly see 20x sales on the SaaS businesses, so this is not actually a horrible report. Not bad. Not a bad report there on Snowflake, so I'll give them that. Nvidia's not out yet. Nvidia comes out in 6 minutes, so that's going to buy us a couple here to go take a peek at ELF. So I'm going to pull up ELF now. I'm a big fan. I don't know about you, but I'm a big fan of just pulling up the investor relations docs. Let me understand the company and see what's going on. I really like financials. Let's see here. SEC filings from ELF. I got a current report filing for today. And let me get the PDF filing. Yep, there it is. Press release. Got it. Stand by for the PDF to open on this new 13-inch iPad. I did not want this iPad. I still remember I made a bet on Twitter. I'm like, the only way I buy this is if a certain option goes in the money. Then it did. I'm like, what? I'm like, okay, well, I guess I'll take my Tandy. So things have been loading a little faster, which is actually pretty nice. It just takes, there's still a lot of steps to get these things turned into PDFs sometimes. All right, so we're going to go straight here because we don't have a lot of time. I'm going to go straight to the cash flow statement. Let's see what's going on with ELF. You've got 127 millies of net income. That's double the net income of last year. Nice. That's great. That's really phenomenal. Like to see that. And then we've got net cash provided by operating activities. A bit less cash provided by operating. And part of that is because of huge inventory buildup. Wow. Why do they have such an inventory buildup than last year? So inventory, look at that inventory explosion. They spent 93 million on inventory. 2023, they were going through it. So their cash flow got hit here. Let me look at inventory here. Oh yeah, look at that. Doubled the inventory they have. Doubled inventory. Okay, good to know. 4 minutes to go for Nvidia. Current liabilities, I'll take all of those. I know some of those are long-term and leases, whatever. I'll take 300 mil here. Long-term debt's 161, so I'll call 300 million. Short-term, 161. I got some other non-deferreds. I don't care about that. Long-term lease, I don't really care about that. I'll call it roughly 200 mil long-term. You know, super rounded math here. And then let's see what cash we have. We have about 108 of cash and cash equivs. So we really need to sell. A lot just went into inventory. So not anywhere near as well capitalized as a Snowflake, obviously. And what's going on with sales over here? So sales... Wow. Yeah, look at that. That's almost a double there on sales. That's basically a double on gross profit. SG&A basically doubled. A lot of 2X's here. I mean, this is some crazy freaking growth. So, and you are actually creating net income, about 15 million bucks in a quarter. Not bad. If I could do 26 cents 4 times a month, or 4 times a year, that'll put me at about $1. And the stock is trading for $141 now, which means I'm trading for about 141 PE ratio, which means even if I'm growing at 50%, I'm almost at a 3 peg. Yeah, it's a little expensive. It's a smidge expensive. So as a result, we could see here, you've got snowflakes already starting to bleed, or should I say melt away. Down at about 6.2%, although I really did like those numbers. And Elf's forecast missing. The reason they're getting hit so hard here is because their forecast missed, and they really need huge growth to justify the valuation, right? So need huge growth to justify valuation. So missing forecast by about 3%. Let me just pull it here, and then I'll have Nvidia up as well. We had Outlook was 124 versus 128. 3.1% miss. Okay. 3.1% hurts. Okay. It's time. It's time for Nvidia. In case you don't already know, there's a coupon code expiring for the courses on building your wealth. That coupon code expires on May 31st. Come join me. If you join the Stocks and Psych group, not only do you get to learn how I trade, but you'll get all my buy-sell alerts. No guarantee that you can match the trades or make money. It's just education. Here we go. And the earnings are coming. Not yet. Any second now. Uh-oh. There it is. Q1 revenue 26 versus 24.69, so it's a beat as usual, but I don't think it's as much of a beat as people wanted given that giant red candlestick there. Automotive revenue beats at 329 versus 292. Data center revenue 22.6 versus 21. That's a beat. Quarterly cash dividend raised to a penny a share. 10-for-1 forward stock split effective June 7th. 10-for-1, baby. That'll bring this sucker down to like a $90 stock. Holy smokes, a 10-for-1 stock split on Nvidia. Woo! That's gonna make people go absolutely bonkers. I'm going to write that on Twitter. Stock split announced on Nvidia. That's pretty crazy. So anyway, so yeah, that'll bring it down to like $100 a share. It's now rallying after that. It's about to go through $1,000. We're literally about to break the all-time high. Well, actually, we did just break the all-time highs. We're about to go through $1,000 here. Data center, I need forecasts, baby. Where are the forecasts? Nvidia is poised for the next phase of our growth cycle. Q2 forecast comes in at 28 billion. 28 billion is the Q2 forecast. Let's look at the last Nvidia report to see what the requirement we were looking for was. There it is. That's a beat. That's a beat right there. See that? We were expecting 26.8. 26.89 bill forecast beat with 28 bill forecast and stock split. There it is. There she blows. It's now up about 3.5%. If you played options on this, you're really either going to have to close your options right when the market opens, or you need this sucker to move at least 7%, because the implied volatility was about 7.5%. Let me see here what else we had. Q1 gaming missed. Q1 gaming came in at 2.6 bill versus 2.62 bill expected. You had the adjusted EPS for Q1. Q1 adjusted EPS, yeah, nice beat. Comes in at 612 versus the 565 expected. Then we had the autos. The automotive revenue beat. Pay attention to that automotive rev versus 292.4 mil. People want to compete with Tesla, and this is going to be one of the ways to try to get exposure to self-driving technologies in the future. We have Q2 data center revenue, $28 billion plus or minus 2%. Yep. Announces 10 for 1 4 split. That's fine. Revenue. Gross margin. Oh my gosh. That's just rude. Rude. Q1 gross margin. Ready for the Q1 gross margin? Q1 gross margin comes in at 78.9% versus the estimate of 77%. 78.9 versus 78%. 78.9 versus 77 expected. Holy smokes, those are some good numbers. Wow, this is very, very impressive. So, hey, I mean, good for me. I got a chunk of my portfolio exposed to Nvidia. I didn't have any options going into this. I did not trade earnings. I have a rule, not that I always follow rules, I don't, but I have a rule against trading earnings. That's pretty wild. And honestly, the stock split, you know this, it does nothing for the fundamentals, but psychologically, people are like, oh, well, stock split, it must go up afterwards. It's, you know, it means nothing for the actual EPS or valuation or whatever, but people feel like it's more tangible. Options become a little bit more accessible. Honestly, this is actually pretty good. Super Micro is moving up about 2.7 after these results. Let's go into some of the actual data. So let's see here. Nvidia Investor Relations. Come on, baby, light my fire. It's going to take me a second to get this. Let's listen in here just for a sec.
So I think that is delightful news, that they're on top of the good fundamental news. And also what I think you're seeing in the aftermarket right here, there's a lot of momentum traders. There's a lot of trading going on. And I think tomorrow when the market opens, you know, you're going to see a lot of retail traders, you know, leaping aboard. 10 for 1 stock split like you had with Chipotle. They announced what was it, 50 to 1, you know, and in that stock just, you know, kept moving ahead, even though it's expensive. You know, after their earnings, they announced the stock split. It was very positive for the name. So I think this will be too.
Okay. I want to bring Mike Santoli into this conversation. I mean,
yeah, she's probably not wrong. All right. Here we go. Here's the filing. Y'all ready? Y'all ready for this? Oh my God. Look at these numbers. This is insane. Last year, $7 billion of revenue. This 3-month period, $26 billion. Holy crap. What AI has done to this company. 26 divided by 7.192. That is a 3.6x. Oh my lord. And their costs? 38 divided by 2544. Costs have gone up 2.2x on costs. That's insane. That is so good. And that's why they're bringing so much to the bottom line. This is incredible. Again, their SG&A goes up a fraction. Like, it'd be okay if their SG&A tripled. No, their SG&A didn't triple. It went up 15.8%. You'd think, oh, well, maybe their research and development has tripled. Nope. Research and development went up 45%. That's so nuts. So OPEX in total went up 39.4%. That's crazy. And then not only did that go up 39.4%, but again, gross profit basically 4x. Divided by 4.648. Yeah, 4x on gross profit. Jeez, they're so good, the numbers. Oh my god. Oh, and look at this. They make so much freaking money in cash that to add insult to injury, they get interest income. Net interest income of basically, you know, $300 million. That's insane. Then they pay some taxes, and then they deliver you a delicious $6. I'll go with the diluted number. Basically the same. $6 of EPS. So 6 times 12... Sorry, 6 times 4 puts you at $24 of earnings. $980 company puts you at 40.8x. You know? And that's not even including Q4. $24 of earnings annualized, not including that Q4 usually balloons. So 40.83x multiplier at this figure annualized. And then obviously, I mean, growth is just insane. Growth at 25% puts this at, if you get that, right? Puts you at 1.6 peg. But keep in mind, if growth slows to say 10%, it'd be a 4 peg. So the growth figure matters a lot. For peg going forward. And again, if I remember correctly, the Wall Street consensus for the next 4 years is 25%. Wall Street is forecasting 25 for the year. Wall Street forecasts $25 for the year of EPS. I put $24 in. So that was pretty close. Pretty good estimate. Actually, I'm sorry. Wall Street is not forecasting 25% EPS growth. My bad. Wall Street is forecasting. Wall Street forecast growth is 24.73% next year. So I'll do Y plus 1. 10.49%. I'm doing that because they have a weird fiscal calendar. Y plus 2. 8.88%. Y plus 3. I know you can't see that for a second. And then negative 3.07, Y plus 4, right? And so what you do is you add this growth together. Minus 307. So I have 40. See, that's not good. 41% growth divided by 4 years. So it's actually, that's where I got that from. Wall Street's forecast growth is only 10% per year on EPS. For the next 4 years after we hit $25 this year. So that trades you somewhat rich. It's trading at about a 4 peg right now. So that makes sense. It's, you know, this 25%, I should put not forecast, right? Okay, so that gives us a little bit of color here. Then, let's see here. Let's look at cash flow. Cash flow should be absolutely insane. Let's see here. We're going to make a little note right here. May 31, 11:59 p.m., next expiration. Remember that. You get my P&L every day that I trade, my profit and loss statement in my trading account. Been very, very profitable so far this year. Took $1 million account. It's at like 1.8 right now. No guarantees we can get the same going forward. No guarantees you'd have the same experience. Could lose money. I could lose money too. But my goal is to just educate how I'm trading and then teach you to fish, so to speak. So if you're interested in that, consider checking out that Stocks and Psychology of Money group. Comes with not only the course lectures, but also all the course member live streams as well. Kind of cool. A lot of people joined this morning. I think today we had, what was it, an $86,000 day, trading like $15,000 to $50,000. So pretty good day. Shout out to Kevin, Jacob, Jonathan, Mark, Carlos, Pauline. That's a cool name. Tindang, Patrick, Andrew, William. Thank you so much for joining. All right. So what do we have here? Net income. So net income, I mean, it's look at the net income. The net income has like 7.5x. 14,881 divided by 2043, 7.28x on net income. The numbers are so good, but that's not what Wall Street wants to value it. Okay, that's scary. This is what I'm talking about with TA. Look at that. Look at where it starts moving. I didn't just put that line there. That's the all-time high. Well, previous all-time high before today. That's all that line is. It's the top of the fibs, and it basically bounced right on top of that. That's bullish. That's good. Really, really cool net income move here. Obviously, stock-based comps like $1 billion, a lot of their expenses here, but that's great because it actually increases their cash flow substantially. $15 billion of cash flow. You've got plant, property, and equipment acquisitions were actually negative, so they sold plant, property, and equipment. So you add that in to get free cash flow? Good Lord. Free cash flow of, I've never seen that before. Negative plant, property, and equipment. Are you kidding me? It's basically a free cash flow of $15.7 billion. Oh my God. That's freaking awesome. Somebody here says in the chat, buy puts at open. But Kevin, it's flirting with another line. Yes. Who doesn't like flirting? The dividend, okay, I understand the dividend's supposed to be up 150%, but let's be clear, it's up a penny. Like, the dividend is nominal here. So somebody says slow grind up here. Yeah. Somebody else says a lot of hedge funds are shorting. Well, I mean, hedge funds hedge, right? That doesn't mean they're net bearish. How do I sign up for the buy seller? It's in on meetkevin.com. Meetkevin.com is where you can sign up if you want. And remember, it's to give you ideas. Like sometimes I'll even send out ideas. I'll say, hey, I'm watching. Like I think one of the alerts I sent today was like, hey, I don't think Tesla's going to hold 180. If it breaks this line, it's going to go to the 178 to 175 lines. We have 2 lines there. And then you can, the idea is just like, hey, here's something I'm spotting. I'm not playing it or I am playing it. You know, what you do with it ultimately is up to you. But my goal is to try to send alerts. Like, for example, today, my plays today were end phase. So I did calls on end phase and then I did puts on end phase today. And I'll show you really quickly and then we'll keep going with the Nvidia. So I played, as soon as we broke 113.40 right here, I went calls. I paper-handed like a little bitch. Right here is right around where I paper-handed, right around 10 o'clock. So I had a nice ride, made good money. Then we went puts, I think. I went puts twice during this downtrend, and I closed when we were bouncing on the 119 line. So I played that sucker twice today. But anyway, so, anyway, okay, good. So let's keep going. So we got cash flow, balance sheet. I mean, let's see how much money they have on their balance sheet. Cash and cash equivs, $31.4 billion in cash. Big fat receivables. Inventories. Inventories moved up. How much though? 5864. This is the last report, so I could get a quarter over quarter analysis here. Oh, it did move up. 5282. Okay. All right. 5282. 5282. 5282 divided by, oh, sorry, the other way around. New number divided by the old number, 11%. inventory growth. That's good. That was one of my concerns, was that there would be some form of inventory obsolescence that we might hit. Doesn't look like it at all. Prepaid expenses up a billy. That's fine. Accrued liabilities of $15 billion. I mean, we have twice as much cash for our current liabilities. That's great. So 2x cash over current liabilities. And then we could also pay down the long-term debt. We could also pay off all long-term debt and still have, you know, what? 5 to 7 bill left over. Quick math. So I'm just rounding some of this so I can get some more news. This is good. Again, the question is all going to be on that forecast, though. So let's take a look at this. We specialize in markets where a computing platform has tremendous acceleration for applications. Revenue up a lot. 18% sequential growth. That's quarter over quarter is what that means, in case you're wondering. Have you considered making a monthly payment plan? No, but what you could do is you could pay in 4 with PayPal, or I think there's also Affirm if you want a BNPL. I think you can Affirm or Klarna if you go to meetkevin.com and sign up. I'm pretty sure those are available. If you have any issues, just send me a message over at staff@meetkevin.com. We'll take care of you. So, but good question. Thank you for that. Somebody says, why is Nvidia dropping? You know, it's really sitting at its all-time high. It's consolidating to its all-time high. I wouldn't necessarily call that a drop. I'd actually call that a win. You had really high expectations going into this. Somebody says here, darn, bought some in after hours for $980. This is going to boom to $1,000 plus this week forward. Maybe. The numbers are very good. You know, I think a lot's going to come down to this earnings call and how much enthusiasm you can get here going forward. The call has not happened yet. No, not yet. Tesla down after hours is all you need to know. Oh, yeah? Let me see here. Tesla. Oh, yeah, it is. Yeah, that's unfortunate. 4% day. It's a sucker. It's a tough stock to diamond hand. That's a toughie. Okay, so when's the call? I think the call's at 2:30, but let me see. And I want to keep reading through this. Oh, it's at 2. Oh, it's in 22 minutes. Thank God. I hate how Tesla makes you wait until 2:30. So it's pretty crazy. Yeah, 10-to-1 stock split for Nvidia, yes. Pretty wild. Okay, so let's keep going on some of this stuff. Okay. Data center revenue up 23% sequentially. I want to see if there are any secrets here. Higher shipments of the Grace Hopper GPU. Okay, so maybe AWS just sucks? That's from my earlier video, in case you're wondering. Networking revenue on the end-to-end solutions and InfiniBand were down 5%. What? Due to timing of supply. Okay. Little weird, but okay. I would have not anticipated that. I thought InfiniBand would have moved up, not down. So I'm a little surprised by that. I like to see that move up, not down, but okay. InfiniBand, in case you don't know, is sort of their version of Ethernet. Okay, let me get into the earnings call super quickly, just so I have it set. This is Q4. Oh, gosh. There we go. Boom. Just sign in really quickly. Okay, man, you can see a little bit of a bounce there on Nvidia. Okay. You'll receive a reminder on the day of the event. Thanks for registering. Okay. Where's my link? And can access the webcast about 15 minutes before. Oh, okay, we're 20 minutes out. That's why. Okay, good. Continuing with the Nvidia numbers. So strong sequential data revenue led by all customer types. Strong cloud. Gaming revenue was down 8% sequentially. Normalization of channel inventory. Sequential decrease was primarily due to desktop workstations. Yeah, well, that's probably because you're seeing more layoffs. More layoffs in finance and tech. Probably contributing to this. Yeah, that is a recessionary signal, obviously. But it doesn't necessarily mean we will go into a recession. Automotive revenue driven by, yep, there it is. Self-driving platform. That's what I'm talking about. That, like, people get mad at me when I say that Nvidia could be a Tesla competitor because they're like, oh, well, they don't have the data yet. They'll get the data. They will get the data. So that does make me a little nervous from a Tesla point of view. But, you know, we're not, I mean, Tesla's still got a substantial lead right now. But they don't have the cash generation that Nvidia does. I mean, consider that. Let's compare for a moment. Tesla burned $2.5 billion in cash flow in the last quarter. Nvidia, in the last quarter, has $15.7 billion of free cash flow. Like, consider that for a moment. Compare this to a typical free cash flow of $500 million to $1 billion for Tesla, or negative $2.5 billion for Q1. Like please just look at that very closely for a moment. It's not good. And you know, I'm not trying to be bearish Tesla. I love the company. I love Tesla. I love the people. But oops, did not want to do that. Redo. There we go. But it is something that I'm not sure that a lot of folks are really paying attention to. Is that lack of cash flow is bad. You need that. You need that so you can make investments and make decisions, right? There we go. That's a bad drawing of an eggplant. All right, where were we? So let's go in over here. Other income. I don't really care. These gap adjustments, whatever. The expenses were up nothing. Increase in employees and compensation. Good. Effective tax rate, 13%. Some foreign derived income. That's fine. Fine. Inventory was at 95 days of inventory. Cash flow was up. Higher revenue. We expect a substantial increase in cash taxes in the second quarter. Oh, yeah. Yeah, you're going to make some tax payments in Q2, baby. So, 10-for-1 stock split to make the stock more accessible to employees and investors. Right, because of employee stock options, and then obviously also public options, but then just people's impressions. People think that when the stock is expensive, like $1,000, they think the stock is expensive, and maybe they're not aware of fractional shares, and not every platform does fractional shares. Oh, it actually increased more than a penny. I'm sorry. I thought it when I saw 0.1, I thought it was 0.01. My bad. They did actually increase their dividend from 4 cents to 10 cents. Oopsies. So a little correction needed there. My bad. Increasing dividend is the equivalent of 1 cent per share. Oh, that's where it came from, on a post-split basis. Oh, that's why they increased the dividend, so you could give 1 penny once the shares divide by 10. That's where the 1 penny came from. Ah, okay. Here's the forecast and the outlook. Margins are expected to be in the mid-70s range for the full year. That's very, very good. The numbers are phenomenal, honestly. This $28 billion of growth, that's great. Now, $28 billion, you have to add that to, or what's the growth rate from what we just hit, right? So quarter-over-quarter growth is being forecast at 28 bill. So we got revenue at 26. Ooh, let's see here. 28 bill divided by 26 bill. Now they're going to beat on that number. That's 7.69% growth forecast for next quarter. And then they'll probably beat on top of that as well. But keep in mind, this last one was $26 billion versus, let's see here, $26 billion versus Q1 of 24,692 divided by 26 rather. Sorry, give me one sec. Just trying to get this math right. 26.044 divided by. See, they only had 5.4% growth between Q1 and 2. Only 5.4% growth between Q4 rather and Q1. Wait, what did we just report? I'm pretty sure we just reported Q1. Yeah, this is Q1 2025. Oh, I hate it when they do this. It's so dumb. Anyway, whatever. So, okay, that's the forecast. Got it. Okay. That's good. And that's it. All right. Very good. Now we're going to CFO commentary. I want to see it. Where's the CFO commentary? Oh. That's just sort of a breakdown. Chart breakdown. Oh, we just read through the commentary. Oh, okay, got it. All right. I'm now waiting for the earnings call. And let's see here. Webcast. Oh yeah. Okay, it's live. Hear that snazzy elevator music? Yeah, that's the Nvidia earnings call. We're already tuned in. Anyway, let's listen in over here for some rando's opinion. Who's this guy?
The reason they're succeeding today. But over the last 12 months or so, there has been a lot of progress in new frameworks for training AI models. There is competition. And I'm sitting and saying all this because no one can deny that today, NVIDIA is the hardware you want to
Somebody
train.
asked, is there a live stream where you make these day trades? Not necessarily. I mean, we have the course member live streams where sometimes I'll trade while I'm live. Sometimes I also trade while I'm live on this channel with the market open live. But yeah, there are times I'll live trade with course members. But it's designed for training and teaching. I don't guarantee profits. I don't promise you're going to do well. You could lose money. Trading is risky, right? I just want to be very transparent. The whole point is just to teach you like what I look for, why I enter positions, why I exit positions, the mistakes I make, or whatever, right? That's
Very
it.
skeptical about this moat that NVIDIA has around itself and continues to aggressively build out now with inferencing and those layers of software.
The call starts in 12 minutes.
Then, especially when we start talking about valuations and what's going to come into the market in the second half of this year and beyond?
Well, people talk about AMD being more expensive or, other competitors being more expensive on a PE basis. And that's, just because of NVIDIA's crazy forecasted revenue growth. On the other hand, NVIDIA's margins are head and shoulders above all those competitors. And that's kind of baked into that argument. Honestly, I think NVIDIA is, their success is great, but I've always been more excited about the customers of NVIDIA and their growth potential. The rest of the Mag 7, I think, have a very valid argument for AI being a huge lift to their revenues over time. And they have a lot less of a cyclical bent the way NVIDIA does. And this is a company that is no stranger to 70% drawdowns when expectations get a little too far ahead of themselves. So I'd rather play in the AI product side with these companies that already have a stable of products that they can improve and upsell.
All right, Fernando Vidal of 314 Research. It's great to have you on. Thanks for joining us. And certainly, speaking of Mag 7, this was sort of the last of the Mag 7. Really the final hurdle to a mega tech earnings victory lap, which arguably you can say with the results we got today can now be had.
Yeah, strong lap for sure.
All right, well, up next, Mike Santoli looks at where the race for third place in market value stands following NVIDIA's earnings as we do count down to the company's analyst call.
All right.
Power.
Boom. Flip over to Doomburger. Yeah, Mag 7 should be Mag 6 by now. Yes, it should be.
The next 24 hours. This is Bloomberg.
coffee tastes like trash. What happened? That was bizarre. Blech. I think sometimes the same pod gets used accidentally. And then it's like water. I don't know. Maybe not. Gotta get off that Kirkland coffee. Somebody's like, rip Lauren. I'm sorry. Look at that bounce. It's like, that line's been there for a while. It's not a hard one to draw either, but, let me see. I'm like, what milk is this? Like goat milk? Anyway. All right, so we got 9 minutes to go. Lauren's gonna throw it at you. I'm sorry. I've never had that. Well, actually, I've screwed up making it myself before too. But anyway, okay. Oh yeah, make sure she knows I love her. There. Okay, so let's see here. Let's see here. Okay. What else? So, what else? We need... Take a look. Oh, somebody's now, like, mowing outside. That's annoying. 3.8% on Nvidia. Bouncing up nicely. Tesla stock. 69.5 on BTC. Alright, this is extremely annoying. Sorry, let me see if you can listen to this instead. Over here. Nope. Alright, you're stuck with the blower mower. The fresh grass. Nope, you're stuck with the mower. Alright, whatever. So, what else is going on here? Dude, hims and hers bled out. 8%. Man, I wanted to trade that one more too. It just gave up all momentum. Target down 8% on the day. Rent the runways down 10% plus another 5%. The momentum movement has just died. Oh, it's getting even closer. 6, whoa! Robinhood took a tanky doodla as well. Look at that. I really want to, like, I want an entry on Robinhood at $17.94. I want it back to that line. Maybe we could even get a push back down under it. That'd be kind of nice. Block down 5.8, Affirm down 5, Reddit down 4. Wow, it's actually a rough day. Holy smokes. Tesla stays negative in the afters. Honestly, possibly those automotive revenues, by the way. Let's see here. What does somebody says about bears? Somebody says, bears really thought Nvidia wouldn't smash earnings. It's not so much that they wouldn't smash earnings. I think everybody thought they would beat. It's just how much do you beat and what's the forecast? That's usually the big deal. Okay, what about here? He's on the 4th channel I sub to. Sorry. Yeah, just keep in mind, there's the Meet Kevin live channel, which is this one, the Meet Kevin Market live channel on YouTube. Just the market open morning live streams, 5:25 every day, totally free. I'm usually late by like a minute. I'm sorry. One of these days I'll actually get in the habit of not. So it's like 5:26 live stream. But anyway, then of course there's the main channel where I'll just post videos. Okay, let's listen in here.
In the post-market trading. I would point out, Nvidia also slightly larger than you would expect based on how close the market values are in the S&P because it uses float adjustment. And of course, Amazon and Alphabet have large kind of shareholdings from their founders. In any case, I also want to point out both Amazon and Alphabet had big, deep stock splits in recent years. I wouldn't let that account for much of the market value gain. Amazon split 2 years ago, 20-1. Didn't do much for the stock in the immediate term. Another thing I want to point out, the types of AI plays that are working and that are not. Goldman Sachs has 3 baskets. AI infrastructure, which relative to the S&P 500 equal weight is doing incredibly well year to date. And then you have AI-enabled revenue plays and AI-enabled productivity companies not doing much. So clearly the entire kind of juice is in those build-out companies, the ones that are creating the capacity to do all the AI work, and not yet in those trying to monetize it in other ways, guys.
It's a great chart. Mike Santoli, thank you. Much more on this wild hour of overtime earnings as we count down to the analyst calls for Nvidia, Snowflake, and Synopsys. Stay with us.
My name is Karan.
The noise will be gone for the call. I promise.
So seen holding rates unchanged, but Chile is seen cutting rates for a seventh time.
So the seventh time.
A seventh time.
I missed the first six.
Yeah.
We're also going to get the G7 finance chief and central banker meetings gathering in Italy.
Yeah, and watch for the possibility of a deal that's been proposed by the U.S. to tap frozen Russian assets to help Ukraine. France is now on board. Germany's warming.
Cody's asking if the buy-sell alerts are sold individually. It's a one-time joining of the Stocks and Psychology of Money group. You get all the lectures, the archive of all the course member live streams, fundamental analysis, the new course member live streams, and lifetime access to the buy-sell alerts. So you pay one time, and then you're in forever.
High-end consumer.
Yeah, and I wonder how it's holding up. I feel like Ralph Lauren kind of straddles that world between the luxury and then more kind of pedestrian,
But maybe you can buy it at Ross stores.
Maybe. We also got some eco data, the weekly jobless claims numbers coming out at 8:30 a.m.
Yeah, and there's this sense that the job market has peaked. Maybe it's starting to roll over a little bit. So these high-frequency data points are really critical.
New home sales coming out at 10 a.m. Washington time, and around 3 p.m. New York time, we're going to hear from Atlanta Fed President Raphael Bostic. That does it for us here on The Close. Tune in to us tomorrow for all your coverage of all the market-moving events. Balance of Power up next in the U.S.
All right, I'm listening to that. But anyway, earnings call coming up. Earnings call in under 2 minutes. So I just want you to know that I'm aware, I'm paying attention, and we'll get this live. You're up now about 4% on Nvidia. Very nice, very nice. All right. Good Lord. So let's look at the stock. Minute and a half to go. And yeah, we'll just kind of hang out for a second. Okay, I think we're good. All right, so yeah, this is going to be pretty exciting. We're going to get the earnings call starting in about 1 minute. I'll probably just keep myself on mute most of the time. I've got it ready to roll, and we'll be taking notes, and then, of course, we'll be doing a summary at the end, as usual. Keep in mind, if you're not yet aware, we also have an event on real estate investing, stock investing, taxes, entrepreneurship, and sales called the Millionaire Symposium. That is coming up on June 21st. That's in less than 30 days. So I'm excited to see you all there soon, and can't wait to meet you all in person. So if you want to learn more about that, also just go to meetkevin.com. It's in Vegas, and we'll have Ben Malla there and some other folks. All right, earnings call's about to start.
Tomorrow, not just about Nvidia, but Intuit is reporting after the bell. The CEO, Sasan Goodarzi, is going to give his thoughts as well. This used to be the huge quarter for them, April end, because it's a tax quarter, but there's more to the business now.
Yeah, and it really is. It's AI, it's consumer, it's Fed speak. That's what's driving the market here. Nvidia, we're going to have to see how this trades tomorrow as well after hitting a record yesterday. That's going to do it for us here at Overtime.
Here's fast money now.
All right. Waiting for it to begin. I still hear that sort of basic.
Good afternoon. My name is Regina, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 again. Thank you. Simona Jankowski, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2025. The content of today's call...
It's audio only. For anybody wondering if there's video, there's no video, so you're just going to look at the sticks and me.
During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 22nd, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight some upcoming events. On Sunday, June 2nd, ahead of the Computex Technology Trade Show in Taiwan, Jensen will deliver a keynote which will be held in person in Taipei, as well as streamed live. And on June 5th, we will present at the Bank of America Technology Conference in San Francisco. With that, let me turn the call over to Colette.
Thanks, Simona. Q1 was another record quarter. Revenue of $26 billion was up 18% sequentially and up 262% year-on-year, and well above our outlook of $24 billion. Starting with data center. Data center revenue of $22.6 billion was a record, up 23% sequentially and up 427% year-on-year, driven by continued strong demand for the Nvidia Hopper GPU computing platform. Compute revenue grew more than 5x, and networking revenue more than 3x from last year. Strong sequential data center growth was driven by all customer types, led by enterprise and consumer internet companies. Large cloud providers continue to drive strong growth as they deploy and ramp Nvidia AI infrastructure at scale and represented the mid-40s as a percentage of our data center revenue. Training and inferencing AI on Nvidia CUDA is driving meaningful acceleration in cloud rental revenue growth, delivering an immediate and strong return on cloud providers' investment. For every $1 spent on Nvidia AI infrastructure, cloud providers have an opportunity to earn $5 in GPU instant hosting revenue over 4 years. NVIDIA's rich software stack and ecosystem and tight integration with cloud providers makes it easy for end customers to get up and running on NVIDIA GPU instances in the public cloud. For cloud rental customers, NVIDIA GPUs offer the best time to train models, the lowest cost to train models, and the lowest cost to inference large language models. For public cloud providers, NVIDIA brings customers to their cloud, driving revenue growth and returns on their infrastructure investments. Leading LLM companies such as OpenAI, Adept, Anthropic, Character AI, Cohere, Databricks, DeepMind, Meta, Mistral, xAI, and many others are building on NVIDIA AI in the cloud. Enterprises drove strong sequential growth in data center this quarter. We supported Tesla's expansion of their training AI cluster to 35,000 H100 GPUs. Their use of NVIDIA AI infrastructure paved the way for the breakthrough performance of FSD version 12, their latest autonomous driving software based on vision. Video transformers, while consuming significantly more computing, are enabling dramatically better autonomous driving capabilities and propelling significant growth for NVIDIA AI infrastructure across the automotive industry. We expect automotive to be our largest enterprise vertical within data center this year, driving a multi-billion revenue opportunity across on-prem and cloud consumption. Consumer internet companies are also a strong growth vertical. A big highlight this quarter was Meta's announcement of Llama 3, their latest large language model, which was trained on a cluster of 24,000 H100 GPUs. Llama 3 powers Meta AI, a new AI assistant available on Facebook, Instagram, WhatsApp, and Messenger. Llama 3 is openly available and has kickstarted a wave of AI development across industries. As generative AI makes its way into more consumer internet applications, we expect to see continued growth opportunities as inference scales both with model complexity as well as with the number of users and number of queries per user, driving much more demand for AI compute. In our trailing 4 quarters, we estimate that inference drove about 40% of our data center revenue. Both training and inference are growing significantly. Large clusters like the ones built by Meta and Tesla are examples of the essential infrastructure for AI production, what we refer to as AI factories. These next-generation data centers host advanced, full-stack accelerated computing platforms where the data comes in and intelligence comes out. In Q1, we worked with over 100 customers building AI factories ranging in size from hundreds to tens of thousands of GPUs, with some reaching 100,000 GPUs. From a geographic perspective, data center revenue continues to diversify as countries around the world invest in sovereign AI. Sovereign AI refers to a nation's capabilities to produce artificial intelligence using its own infrastructure, data, workforce, and business networks. Nations are building up domestic computing capacity through various models. Some are procuring and operating sovereign AI clouds in collaboration with state-owned telecommunication providers or utilities. Others are sponsoring local cloud partners to provide a shared AI computing platform for public and private sector use. For example, Japan plans to invest more than $740 million in key digital infrastructure providers, including KDDI, Sakura Internet, and SoftBank, to build out the nation's sovereign AI infrastructure. France-based Scaleway, a subsidiary of the Iliad Group, is building Europe's most powerful cloud-native AI supercomputer. In Italy, Swisscom Group will build the nation's first and most powerful NVIDIA DGX-powered supercomputer to develop the first LLM natively trained in the Italian language. And in Singapore, the National Supercomputer Center is getting upgraded with NVIDIA Hopper GPUs, while Singtel is building NVIDIA's accelerated AI factories across Southeast Asia. NVIDIA's ability to offer end-to-end compute to networking technologies, full-stack software, AI expertise, and rich ecosystem of partners and customers allows sovereign AI and regional cloud providers to jumpstart their country's AI ambitions. From nothing the previous year, we believe sovereign AI revenue can approach the high single-digit billions this year. The importance of AI has caught the attention of every nation. We ramped new products designed specifically for China that don't require an export control license. Our data center revenue in China is down significantly from the level prior to the imposition of the new export control restrictions in October. We expect the market in China to remain very competitive going forward. From a product perspective, the vast majority of compute revenue was driven by our Hopper GPU architecture. Demand for Hopper during the quarter continued to increase. Thanks to CUDA algorithm innovations, we've been able to accelerate LLM inference on H100 by up to 3x, which can translate to a 3x cost reduction for serving popular models like Llama 3. We started sampling the H200 in Q1 and are currently in production with shipments on track for Q2. The first H200 system was delivered by Jensen to Sam Altman and the team at OpenAI and powered their amazing GPT-4o demos last week. H200 nearly doubles the inference performance of H100, delivering significant value for production deployments. For example, using Llama 3, which with 700 billion parameters, a single Nvidia HGX H200 server can deliver 24,000 tokens per second, supporting more than 2,400 users at the same time. That means for every $1 spent on Nvidia HGX H200 servers at current prices per token, an API provider serving Llama 3 tokens can generate $7 in revenue over 4 years.
Wow.
With ongoing software optimizations, we continue to improve the performance of NVIDIA AI infrastructure for serving AI models.
Some optimistic, those are very optimistic projections. Spend $1, get $7 in revenue over 4 years.
Constrained on H200. At the same time, Blackwell is in full production. We are working to bring up our system and cloud partners for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. Grace Hopper Superchip is shipping in volume. Last week at the International Supercomputing Conference, we announced that 9 new supercomputers worldwide are using Grace Hopper for combined 200 exaflops of energy-efficient AI processing power delivered this year. These include the Alps supercomputer at the Swiss National Supercomputing Center, the fastest AI supercomputer in Europe, Isambard AI at the University of Bristol in the UK, and Jupiter in the Jülich Supercomputing Center in Germany. We are seeing an 80% attach rate of Grace to Hopper in supercomputing due to its high energy efficiency and performance. We are also proud to see supercomputers powered with Grace Hopper take the number 1, the number 2, and the number 3 spots of the most energy efficient supercomputers in the world. Strong networking year-on-year growth was driven by InfiniBand. We experienced a modest sequential decline, which was largely due to the timing of supply, with demand well ahead of what we were able to ship. We expect networking to return to sequential growth in Q2. In the first quarter, we started shipping our new Spectrum-X Ethernet networking solution optimized for AI from the ground up. It includes our Spectrum-4 switch, Bluefield 3 DPU, and new software technologies to overcome the challenges of AI on Ethernet to deliver 1.6x higher networking performance for AI processing compared with traditional Ethernet. Spectrum-X is ramping in volume with multiple customers, including a massive 100,000 GPU cluster. Spectrum-X opens a brand new market to NVIDIA networking and enables Ethernet-only data centers to accommodate large-scale AI. We expect Spectrum-X to jump to a multi-billion-dollar product line within a year. At GTC in March, we launched our next-generation AI factory platform, Blackwell. The Blackwell GPU architecture delivers up to 4x faster training and 30x faster inference than the H100 and enables real-time generative AI on trillion-parameter large language models. Blackwell is a giant leap with up to 25x lower TCO and energy consumption than Hopper. The Blackwell platform includes the 5th generation NVLink with a multi-GPU spine and new InfiniBand and Ethernet switches, the X800 series, designed for a trillion-parameter scale AI. Blackwell is designed to support data centers universally, from hyperscale to enterprise, training to inference, x86, to gray CPUs, Ethernet to InfiniBand networking, and air cooling to liquid cooling. Blackwell will be available in over 100 OEM and ODM systems at launch, more than double the number of Hoppers launched and representing every major computer maker in the world. This will support fast and broad adoption across the customer types, workloads, and data center environments in the first year of shipments. Blackwell time-to-market customers include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. We announced a new software product with the introduction of Nvidia Inference Microservices, or NIM. NIMs provide secure and performance-optimized containers powered by Nvidia CUDA acceleration in network computing and inference software, including Triton Inference Server and TensorRT LLM with industry-standard APIs for a broad range of use cases, including large language models for text, speech, imaging, vision, robotics, genomics, and digital biology. They enable developers to quickly build and deploy generative AI applications using leading models from Nvidia, AI21, Adept, Cohere, Getty Images, and Shutterstock, and open models from Google, Hugging Face, Meta, Microsoft, Mistral AI, Snowflake, and Stability AI.
Snowflake.
NIMs will be offered
Stability's going bankrupt.
Enterprise software platform for production deployment in the cloud or on-prem. Moving to gaming and AI PCs. Gaming revenue of $2.65 billion was down 8% sequentially and up 18% year-on-year, consistent with our outlook for a seasonal decline. The GeForce RTX Supers GPUs market reception is strong and end demand and channel inventory remain healthy across the product range. From the very start of our AI journey, we equipped GeForce RTX GPUs with CUDA Tensor cores. Now with over 100 million of an installed base, GeForce RTX GPUs are perfect for gamers, creators, AI enthusiasts, and offer unmatched performance for running generative AI applications on PCs. NVIDIA has full technology stack for deploying and running fast and efficient generative AI inference on GeForce RTX PCs. TensorRT LLM now accelerates Microsoft Phi 3 mini model and Google's Gemma 2B and 7B models, as well as popular AI frameworks, including LangChain and Llama Index. Yesterday, NVIDIA and Microsoft announced AI performance optimizations for Windows to help run LLMs up to 3x faster on NVIDIA GeForce RTX AI PCs. And top game developers, including NetEase Games, Tencent, and Ubisoft, are embracing NVIDIA Avatar Character Engine to create lifelike avatars to transform interactions between gamers and non-playable characters. Moving to ProViz.
This will be a lot more fun when Q&A actually starts and Jensen jumps in and starts talking about the $1 trillion opportunities and blah, blah, blah.
We believe generative AI and omniverse industrial digitalization will drive the next wave of professional visualization growth. At GTC, we announced new Omniverse Cloud APIs to enable developers to integrate Omniverse industrial digital twin and simulation technologies into their applications. Some of the world's largest industrial software makers are adopting these APIs, including Ansys, Cadence, 3D Excite, at Dassault Systems, Brand, and Siemens. And developers can use them to stream industrial digital twins to spatial computing devices such as Apple Vision Pro. Omniverse Cloud APIs will be available on Microsoft Azure later this year. Companies are using Omniverse to digitalize their workflows. Omniverse-powered digital twins enable Wistron, one of our manufacturing partners, to reduce end-to-end production cycle times by 50% and defect rates by 40%. And BYD, the world's largest electric vehicle maker, is adopting Omniverse for virtual factory planning and retail configurations. Moving to automotive, revenue was $329 million, up 17% sequentially and up 11% year-on-year. Sequential growth was driven by the ramp of AI cockpit solutions with global OEM customers and strength in our self-driving platforms.
Yep.
Year-on-year
that's
growth
big.
was driven primarily by self-driving.
Self-driving,
We
there it is.
supported Xiaomi in the successful launch of its first electric vehicle, the SU7 sedan built on the Nvidia Drive Orin, our AI car computer for software-defined AV fleets. We also announced a number of new design wins on Nvidia Drive Thor, the successor to Orin, powered by the new Nvidia Blackwell architecture, with several leading EV makers, including BYD, XPeng, GAC's Ion Hyper, and Neural. Drive Thor is slated for production vehicles starting next year. Okay, moving to the rest of the P&L. GAAP gross margin expanded sequentially to 78.4% and non-GAAP.
While she reads some of those boring numbers, big shout out to the names on screen here. Those are all people who just joined Stocks and Psych just within the last hour. Thank you so much for joining. And those of you who have questions, just email us over at staff@meetkevin.com. Remember, it comes with, of course, member lives and the stock trading alerts. No guarantees. We can always make money or lose money or whatever, but it gives you ideas.
The future isn't scary.
Oops.
Increased compute and infrastructure investments. In Q1, we returned $7.8 billion to shareholders in the form of share repurchases and cash dividends. Today, we announced a 10-for-1 split of our shares, with June 10th as the first day of trading on a split-adjusted basis. We are also increasing our dividend by 150%. Let me turn to the outlook for the second quarter. Total revenue is expected to be $28 billion, plus or minus 2%. We expect sequential growth in all market platforms. GAAP and non-GAAP gross margins are expected to be 74.8% and 75.5%, respectively, plus or minus 50 basis points, consistent with our discussion last quarter. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4 billion and $2.8 billion, respectively. Full-year OpEx is expected to grow in the low 40% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $300 million, excluding gains and losses from non-affiliated investments. GAAP and non-GAAP tax rates are expected to be 17% plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. I would like to now turn it over to Jensen, as he would like to make a few comments.
Thanks, Colette. The industry is going through a major change. Before we start Q&A, let me give you some perspective on the importance of the transformation. The next industrial revolution has begun.
Here we go again.
Companies and countries are partnering with Nvidia to shift the trillion-dollar installed base of traditional data centers to accelerated computing and build a new type of data center, AI factories, to produce a new commodity, artificial intelligence. AI will bring significant productivity gains to nearly every industry and help companies be more cost and energy efficient while expanding revenue opportunities. CSPs were the first generative AI movers. With Nvidia, CSPs accelerated workloads to save money and power. The tokens generated by Nvidia Hopper drive revenues for their AI services. And Nvidia Cloud instances attract rental customers from our rich ecosystem of developers. Strong and accelerating demand for generative AI training and inference on the Hopper platform propels our data center growth. Training continues to scale as models learn to be multimodal. understanding text, speech, images, video, and 3D, and learn to reason and plan. Our inference workloads are growing incredibly. With generative AI, inference, which is now about fast token generation at massive scale, has become incredibly complex. Generative AI is driving a from foundation up, full stack computing platform shift that will transform every computer interaction. From today's information retrieval model, we are shifting to an answers and skills generation model of computing. AI will understand context and our intentions, be knowledgeable, reason, plan, and perform tasks. We are fundamentally changing how computing works and what computers can do. From general purpose CPU to GPU accelerated computing, from instruction-driven software to intention understanding models, from retrieving information to performing skills. And at the industrial level, from producing software to generating tokens, manufacturing digital intelligence. Token generation will drive a multi-year build-out of AI factories. Beyond cloud service providers, generative AI has expanded to consumer internet companies and enterprise, sovereign AI, automotive, and healthcare customers, creating multiple multi-billion-dollar vertical markets. The Blackwell platform is in full production and forms the foundation for trillion parameter scale generative AI. The combination of Grace CPU, Blackwell GPUs, NVLink, Quantum, Spectrum, NICs and switches, high-speed interconnects, and a rich ecosystem of software and partners let us expand and offer a richer and more complete solution for AI factories than previous generations. Spectrum X opens a brand new market for us to bring large-scale AI to Ethernet-only data centers. And NVIDIA NIMs is our new software offering that delivers enterprise-grade, optimized generative AI to run on CUDA everywhere, from the cloud to on-prem data centers to RTX AI PCs, through our expansive network of ecosystem partners. From Blackwell to Spectrum X to NIMs, we are poised for the next wave of growth. Thank you.
Thank you, Jensen. We will now open the call for questions. Operator, could you please poll for questions?
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. As a reminder, please limit yourself to one question.
Stock's at like
Your first
1,006
question
right now.
comes from the line of Stacy Rasgon with Bernstein. Please go ahead.
Hi, guys. Thanks for taking my questions. My first one, I wanted to drill a little bit into the Blackwell comments that it's in full production now. What does that suggest with regard to shipments and delivery timing if that product doesn't sound like it's sampling anymore? What does it mean when that's actually in customers' hands if it's in production now?
We will be shipping. Well, we've been in production for a little bit of time, but our production shipments will start in Q2 and ramp in Q3, and customers should have data centers stood up in Q4.
Got it. So this year we will see Blackwell revenue, sounds like.
We will see a lot of Blackwell revenue this year.
Our next question will come from the line of Timothy Arcuri with UBS. Please go ahead.
Thanks a lot. I wanted to ask Jensen about the deployment of Blackwell versus Hopper, just given the system's nature and all the demand for GB that you have. How does the deployment of this stuff differ from Hopper? I guess I ask because liquid cooling at scale hasn't been done before, and there's some engineering challenges both at the node level and within the data center. So do these complexities sort of elongate the transition, and how do you sort of think about how that's all going? Thanks.
Yep. Blackwell comes in many configurations. Blackwell is a platform, not a GPU. And the platform includes support for air-cooled, liquid-cooled, x86, and Grace, InfiniBand, now Spectrum X, and very large NVLink domain that I demonstrated at GTC, that I showed at GTC. And so for some customers, they will ramp into their existing install base of data centers that are already shipping Hoppers. They will easily transition from H100 to H200 to B100. And so Blackwell systems have been designed to be backwards compatible, if you will, electrically, mechanically. And of course, the software stack that runs on Hopper will run fantastically on Blackwell. We also have been priming the pump, if you will, with the entire ecosystem, getting them ready for liquid cooling. We've been talking to the ecosystem about Blackwell for quite some time. And the CSPs, the data centers, the ODMs, the system makers, our supply chain beyond them, the cooling supply chain base, liquid cooling supply chain base, data center supply chain base. No one is going to be surprised with Blackwell coming and the capabilities that we would like to deliver with Grace Blackwell 200. GB200 is going to be exceptional.
Our next question will come from the line of Vivek Arya with Bank of America Securities. Please go ahead.
Thanks for taking my question. Jensen, how are you ensuring that there is enough utilization of your products and that there isn't a pull ahead or hoarding behavior because of tight supply, competition, or other factors? What checks have you built in the system to give us confidence that monetization is keeping pace with your really very strong shipment growth?
Well, I guess there's the big picture view that I'll come to, and then I'll answer your question directly. The demand for GPUs in all the data centers is incredible. We're racing every single day, and the reason for that is because applications like ChatGPT and GPT-4o, and now it's going to be multimodality, and Gemini and its ramp and Anthropic, and all of the work that's being done at all the CSPs are consuming every GPU that's out there. There's also a long line of generative AI startups, some 15,000, 20,000 startups that in all different fields, from multimedia to digital characters, of course, all kinds of design tool application, productivity applications, digital biology, the moving of the AV industry to video so that they can train end-to-end models to expand the operating domain of self-driving cars. The list is just quite extraordinary. We're racing, actually. Customers are putting a lot of pressure on us to deliver the systems and stand it up as quickly as possible. And of course, I haven't even mentioned all of the sovereign AIs who would like to train all of their regional natural resource of their country, which is their data, to train their regional models. And there's a lot of pressure to stand those systems up. So anyhow, the demand, I think, is really, really high, and it outstrips our supply. Longer term, that's the reason why I jumped in to make a few comments. Longer term, we're completely redesigning how computers work, and this is a platform shift. Of course, it's been compared to other platform shifts in the past, but time will clearly tell that this is much more profound than previous platform shifts. And the reason for that is because the computer is no longer an instruction-driven only computer. It's an intention understanding computer. And it understands, of course, the way we interact with it, but it also understands our meaning, what we intend, that we asked it to do, and it has the ability to reason, inference iteratively to process a plan, and come back with a solution. And so every aspect of the computer is changing in such a way that instead of retrieving pre-recorded files, it is now generating contextually relevant, intelligent answers. And so that's going to change computing stacks all over the world. And you saw a build that, in fact, even the PC computing stack is going to get revolutionized. And this is just the beginning of all the things that, what people see today are the beginning of the things that we're working in our labs and the things that we're doing with all the startups and large companies and developers all over the world. It's going to be quite extraordinary.
Our next question will come from the line of Joe Moore with Morgan Stanley. Please go ahead.
Great, thank you. Understanding what you just said about how strong demand is, you have a lot of demand for H200 and for Blackwell products. Do you anticipate any kind of pause with Hopper and H100 as you sort of migrate to those products? Will people wait for those new products, which would be a good product to have, or do you think there's enough demand for H100 to sustain growth?
We see increasing demand of Hopper through this quarter. And we expect demand to outstrip supply for some time. As we now transition to H200, as we transition to Blackwell. Everybody is anxious to get their infrastructure online. And the reason for that is because they're saving money and making money, and they would like to do that as soon as possible.
Our next question will come from the line of Toshiya Hari with Goldman Sachs. Please go ahead.
Hi, thank you so much for taking the question. Jensen, I wanted to ask about competition. I think many of your cloud customers have announced, new or updates to their existing internal programs, right, in parallel to what they're working on with you guys. To what extent do you consider them as competitors, medium to long term? And in your view, do you think they're limited to addressing mostly internal workloads, or could they be broader in what they address going forward? Thank you.
Yeah, we're different in several ways. First, NVIDIA's accelerated computing architecture allows customers to process every aspect of their pipeline, from unstructured data processing to prepare it for training, to structured data processing, data frame processing like SQL to prepare for training, to training, to inference. And as I was mentioning in my remarks, that inference has really fundamentally changed. It's now generation. It's not trying to just detect the cat, which was plenty hard in itself, but it has to generate every pixel of a cat. And so the generation process is a fundamentally different processing architecture, and it's one of the reasons why TensorRT LLM was so well received. We improved the performance in using the same chips on our architecture by a factor of 3. That kind of tells you something about the richness of our architecture and the richness of our software. So one, you could use NVIDIA for everything from computer vision to image processing to computer graphics to all modalities of computing. And as the world is now suffering from computing cost and computing energy inflation because general purpose computing has run its course, accelerated computing is really the sustainable way of going forward. So accelerated computing is how you're going to save money in computing, is how you're going to save energy in computing. And so the versatility of our platform results in the lowest TCO for their data centers. Second, we're in every cloud. And so for developers that are looking for a platform to develop on, starting with NVIDIA is always a great choice. And we're on-prem, we're in the cloud, we're in computers of any size and shape. We're practically everywhere. And so that's the second reason. The third reason has to do with the fact that we build AI factories. And this is becoming more and apparent to people that AI is not a chip problem only. It starts, of course, with very good chips, and we build a whole bunch of chips for our AI factories, but it's a systems problem. In fact, even AI is now a systems problem. It's not just one large language model. It's a complex system of a whole bunch of large language models that are working together. And so the fact that NVIDIA builds this system causes us to optimize all of our chips to work together as a system, to be able to have software that operates as a system, and to be able to optimize across the system. And just to put it in perspective in simple numbers, if you had a $5 billion infrastructure and you improve the performance by a factor of 2, which we routinely do, when you improve the infrastructure by a factor of 2, the value to you is $5 billion. All the chips in that data center doesn't pay for it. And so the value of it is really quite extraordinary. And this is the reason why today performance matters everything. This is at a time when the highest performance is also the lowest cost, because the infrastructure cost of carrying all of these chips costs a lot of money, and it takes a lot of money to fund the data center, to operate the data center, the people that goes along with it, the power that goes along with it, the real estate that goes along with it. All of it adds up. And so the highest performance is also the lowest TCO.
Our next question will come from the line of Matt Ramsey with TD Cowen. Please go ahead.
Thank you very much. Good afternoon, everyone. Jensen, I've been in the data center industry my whole career. I've never seen the velocity that you guys are introducing new platforms at the same combination of the performance jumps that you're getting. I mean, 5x in training. Some of the stuff you talked about at GTC up to 30x in inference. And that it's an amazing thing to watch, but it also creates an interesting juxtaposition where the current generation of product that your customers are spending billions of dollars on, it's going to be not as competitive with your new stuff very, very much more quickly than the depreciation cycles of that product. So I'd like you to, if you wouldn't mind, speak a little bit about how you're seeing that situation evolve itself with customers. As you move to Blackwell, they're going to have very large installed bases, obviously software compatible, but large installed bases of product that's not nearly as performant as your new generation stuff. And it'd be interesting to hear what you see happening with customers along that path. Thank you.
Yeah, really appreciate it. Three points that I'd like to make. If you're 5% into the build out versus if you're 95% into the build out, you're going to feel very differently. And because you're only 5% into the build out, anyhow, you build as fast as you can. And when Blackwell comes, it's going to be terrific. And then after Blackwell, as you mentioned, we have other Blackwells coming. And then we're on a 1-year rhythm as we've explained to the world. And we want our customers to see our roadmap for as far as they like, but they're early in their build out anyways, and so they had to just keep on building. Okay, and so there's going to be a whole bunch of chips coming at them, and they just got to keep on building and just, if you will, performance average your way into it. So That's the smart thing to do. They need to make money today. They want to save money today, and time is really, really valuable to them. Let me give you an example of time being really valuable. Why this idea of standing up a data center instantaneously is so valuable, and getting this thing called time to train is so valuable. The reason for that is because the next company who reaches the next major plateau gets to announce a groundbreaking AI. And the second one after that gets to announce something that's, 0.3% better. And so the question is, do you want to be repeatedly the company delivering groundbreaking AI, or the company, delivering 0.3% better? And that's the reason why this race, as in all technology races, the race is so important. And you're seeing this race across multiple companies because this is so vital to have technology leadership, for companies to trust the leadership and want to build on your platform, and know that the platform that they're building on is going to get better and better. And so leadership matters a great deal. Time to train matters a great deal. The difference between time to train that is, 3 months earlier just to get it done, in order to get time to train on a 3 months project, getting started 3 months earlier is everything. And so it's the reason why we're standing up Hopper systems like mad right now, because the next plateau is just around the corner. And so that's the second reason. The first comment that you made is really a great comment, which is, how is it that we're moving so fast and advancing so quickly? Because we have all the stacks here. We literally build the entire data center, and we can monitor everything, measure everything, optimize across everything. We know where all the bottlenecks are. We're not guessing about it. We're not putting up PowerPoint slides that look good. We're actually, we also like our PowerPoint slides to look good, but we're delivering systems that perform at scale. And the reason why we know they perform at scale is because we built it all here. Now, one of the things that we do that's a bit of a miracle is that we build entire AI infrastructures here, but then we disaggregate it and integrate it into our customers' data centers however they like. But we know how it's going to perform, and we know where the bottlenecks are. We know where we need to optimize with them, and we know where we have to help them improve their infrastructure to achieve the most performance. This deep, intimate knowledge at the entire data center scale is fundamentally what sets us apart today. We build every single chip from the ground up. We know exactly how processing is done across the entire system. And so we understand exactly how it's going to perform and how to get the most out of it with every single generation. And so I appreciate it. Those are the 3 points.
Your next question will come from the line of Mark Lipakis with Evercore ISI. Please go ahead.
Hi, thanks for taking my question. Jensen, in the past, you've made the observation that general purpose computing ecosystems typically dominated each computing era, and I believe the argument was that they could adapt to different workloads, get higher utilization, drive cost compute cycle down, and this was a motivation for why you were driving to a general purpose GPU CUDA ecosystem for accelerated computing. And if I mischaracterize that observation, please do let me know. So the question is, given that the workloads that are driving demand for your solutions are being driven by neural network training and inferencing, which on the surface seem like a limited number of workloads, then it might also seem to lend themselves to custom solutions. And so then the question is, does the general purpose computing framework become more at risk, or is there enough variability or a rapid enough evolution on these workloads that support that historical general purpose framework? Thank you.
Yeah, NVIDIA's accelerated computing is versatile, but I wouldn't call it general purpose. Like, for example, we wouldn't be very good at running the spreadsheet. That was really designed for general purpose computing. And so the control loop of an operating system code probably isn't fantastic for general purpose computing, not for accelerated computing. And so I would say that we're versatile, and that's usually the way I describe it. there's a rich domain of applications that we're able to accelerate over the years, but they all have a lot of commonalities. Maybe some deep differences, but commonalities. They're all things that I can run in parallel. They're all heavily threaded. 5% of the code represents 99% of the runtime, for example. Those are all properties of accelerated computing. The versatility of our platform and the fact that we design entire systems is the reason why, over the course of the last 10 years or so, the number of startups that you guys have asked me about in these conference calls is fairly large. And every single one of them, because of the brittleness of their architecture, the moment generative AI came along, or the moment diffusion models came along, the moment the next models are coming along now, and now all of a sudden, look at this, large language models with memory. Because the large language model needs to have memory so they can carry on a conversation with you, understand the context. All of a sudden, the versatility of the Grace memory became super important. And so each one of these advances in generative AI and the advancement of AI really begs for not having a widget that's designed for one model, but to have something that is really good for this entire domain, properties of this entire domain, but obeys the first principles of software. That software is going to continue to evolve. That software is going to keep getting better and bigger. We believe in the scaling of these models. There's a lot of reasons why we're going to scale by easily 1 million times in the coming few years for good reasons, and we're looking forward to it, and we're ready for it. And so the versatility of our platform is really quite key. And it's not if you're too brittle and too specific, you might as well just build an FPGA or you build an ASIC or something like that. But that's hardly a computer.
Our next question will come from the line of Blaine Curtis with Jefferies. Please go ahead.
Hey, thanks for taking my question. I actually kind of curious. I mean, being supply constrained, how do you think about? I mean, you came out with a product for China H20. I'm assuming there'd be a ton of demand for it, but obviously you're trying to serve your customers with the other Hopper products. Just kind of curious how you're thinking about that in the second half. You could elaborate any impact, what you're thinking for sales as well as gross margin.
I didn't hear the questions. Something bleeped out.
H20 and how you're thinking about allocating supply between the different Hopper products.
Well, we have customers that we honor, and we do our best for every customer. It is the case that our business in China is substantially lower than the levels of the past, and it's a lot more competitive in China now because of the limitations on our technology, and so those matters are true. However, we continue to do our best to serve the customers in the markets there, and to the best of our ability, we'll do our best. And so, but that, I think overall the comments that we made about demand outstripping supply is for the entire market, and particularly so for H200 and Blackwell towards the end of the year.
Our next question will come from the line of Srini Pajjuri with Raymond James. Please go ahead.
Thank you. Jensen, actually more of a clarification on what you said. GB200 systems, it looks like there is a significant demand for systems. Historically, I think you've sold a lot of HGX boards and some GPUs, and the systems business was relatively small. So I'm just curious, why is it that now you are seeing such a strong demand for systems going forward? Is it just the TCO, or is it something else, or is it just the architecture? Thank you.
Yeah, I appreciate that. In fact, the way we sell GB200 is the same. We disaggregate all of the components that make sense, and we integrate them into computer makers. We have 100 different computer sys configurations that are coming this year for Blackwell, and that is off the charts. Hopper, frankly, had only half, but that's at its peak. You know, it started out with way less than that even, and so you're going to see liquid cooled version, air cooled version, x86 versions, Grace versions, you know, so on and so forth. And there's a whole bunch of systems that are being designed, and they're offered from all of our ecosystem of great partners. Nothing has really changed. Now, of course, the Blackwell platform has expanded our offering tremendously. The integration of CPUs and the much more compressed density of computing, liquid cooling is going to save data centers a lot of money in provisioning power, and not to mention to be more energy efficient. And so it's a much better solution. It's more expansive, meaning that we offer a lot more components of a data center, and everybody wins. You know, the data center gets much higher performance, much better networking, from networking switches, networking, of course, NICs. We have Ethernet now, so that we can bring NVIDIA AI to a large-scale NVIDIA AI to customers who only know how to operate Ethernet because of the ecosystem that they have, and so Blackwell is much more expansive. We have a lot more to offer our customers this generation around.
Our next question will come from the line of William Stein with Truist Securities. Please go ahead.
Great. Thanks for taking my question. Jensen, at some point, NVIDIA decided that while there were reasonably good CPUs available for data center operations, your ARM-based Grace CPU provided some real advantage that made that technology worth delivering to customers, perhaps related to cost or power consumption or technical synergies between Grace and Hopper or Grace and Blackwell. Can you address whether there could be a similar dynamic that might emerge on the client side, whereby while there are very good solutions, you've highlighted that Intel and AMD are very good partners and deliver great products in x86, but there might be some, especially in emerging AI workloads, some advantage that NVIDIA can deliver that others have more of a challenge?
Well, you mentioned some really good reasons. It is true that for many of the applications, our partnership with our x86 partners are really terrific, and we build excellent systems together. But Grace allows us to do something that isn't possible with the system configuration today. The memory system between Grace and Hopper are coherent and connected. The interconnect between the two chips, calling it two chips is almost weird because it's like a super chip. The two of them are connected with this interface that's like a terabytes per second. It's off the charts. And the memory that's used by Grace is LPDDR. It's the first data center grade low power memory. And so we save a lot of power on every single node. And then finally, because of the architecture, because we can create our own architecture with the entire system now, we could create something that has a really large NVLink domain, which is vitally important to the next generation large language models for inferencing. And so you saw that GB200 has a 72 node NVLink domain. That's like 72 Blackwells connected together into one giant GPU. And so we needed Grace Blackwells to be able to do that. And so there are architectural reasons there are software programming reasons, and then there's system reasons that are essential for us to build them that way. And so if we see opportunities like that, we'll explore it. And so today, as you saw at the build yesterday, which I thought was really excellent, Satya announced the next generation PCs, Copilot plus PC, which runs fantastically on Nvidia's RTX GPUs that are shipping in laptops, but it also supports ARM beautifully, and so it opens up opportunities for system innovation, even for PCs.
Our last question comes from the line of C.J. Muse with Cantor Fitzgerald. Please go ahead.
Yeah, good afternoon. Thank you for taking the question. I guess, Jensen, a bit of a longer-term question. I know Blackwell hasn't even launched yet, but obviously investors are forward-looking, and amidst rising potential competition from GPUs and custom ASICs, how are you thinking about NVIDIA's pace of innovation ahead? Your million-fold scaling over the last decade, truly impressive. CUDA, sparsity, precision, Grace, coherent connectivity. When you look forward, what frictions need to be solved in the coming decade? And I guess maybe more importantly, what are you willing to share with us today?
Well, I can announce that after Blackwell, there's another chip, and we are on a 1-year rhythm, and so you can also count on us having new networking technology on a very fast rhythm. We're announcing Spectrum X for Ethernet, but we're all in on Ethernet, and we have a really exciting roadmap coming for Ethernet. We have a rich ecosystem of partners. Dell announced that they're taking Spectrum X to market. We have a rich ecosystem of customers and partners who are going to announce taking our entire AI factory architecture to market. And so for companies that want the ultimate performance, we have InfiniBand computing fabric. InfiniBand is a computing fabric. Ethernet's a network. And InfiniBand, over the years, started out as a computing fabric, became a better and better network. Ethernet is a network. And with Spectrum X, we're going to make it a much better computing fabric. And we're fully committed to all three links: NVLink computing fabric for a single computing domain, to InfiniBand computing fabric, to Ethernet networking computing fabric. And so we're going to take all three of them forward at a very fast clip. And so you're going to see new switches coming, new NICs coming, new capability, new software stacks that run on all three of them. New CPUs, new GPUs, new networking NICs, new switches, a mountain of chips that are coming. And all of it, the beautiful thing is all of it runs CUDA, and all of it runs our entire software stack. So if you invest today on our software stack, without doing anything at all, it's just going to get faster and faster and faster and faster. And if you invest in our architecture today, without doing anything, it will go to more and more clouds and more data centers, and everything just runs. And so I think the pace of innovation that we're bringing will drive up the capability on the one hand and drive down the TCO on the other hand. And so we should be able to scale out with the NVIDIA architecture for this new era of computing and start this new industrial revolution where we manufacture not just software anymore, but we manufacture artificial intelligence tokens, and we're going to do that at scale. Thank you.
That will conclude our question and answer session and our call for today. We thank you all for joining, and you may now disconnect.
All right, it is summary time. Who's ready for the summary? Wow, that was a lot. All right, give me 5 or so seconds here to get started, and let's get going. Well, Nvidia just reported earnings, and as many expected, they smashed. But in this video, we got to talk about how much they smashed, and we got to talk about the next chip after Blackwell. Yeah, the earnings call was left off with a cliffhanger of what's next. So let's talk about Nvidia's valuation, what was said, how this competes potentially with Tesla, and everything you got to know about the earnings call. This particular video is going to be brought to you by a new sponsor. Coinbase is now sponsoring the channel. So if you want to sign up for Coinbase, you can get $200 for signing up and creating an account. Just go to metkevin.com/Coinbase. Shout out to Coinbase for the paid partnership. Really cool, very exciting. Also looking forward to some institutional integrations in the future with real world assets and real estate, but that's all down the road. So learn more there at metkevin.com/Coinbase. So let's get into Nvidia. Okay, this was absolutely remarkable. First of all, revenue is up 3.6x. This is not percent, X year over year. Cost of revenue is only up 2.2x. That means gross profit was literally up 4x. Their net income at the company, net income was up 7.2x. Like, the absolute explosion in money that they are creating is absolutely insane. I want you to compare Nvidia to Tesla for a moment. Now keep in mind, Tesla is a manufacturer. Nvidia is just a designer. Big difference. TSM manufactures a lot of the Nvidia chips. Nvidia generated $15.7 billion in free cash flow in 3 months. That means they generated more free cash flow in literally 1 month than Tesla did in the entire year of 2023. See, in Q1, Tesla had negative $2.5 billion of free cash flow. Free cash flow 2023 was $4.3 billion. And in 2022, it was $8.5 billion. So near Tesla's peak, Nvidia still doubled Tesla's free cash flow in just 1 quarter that took Tesla a year at peak, which is remarkable. Now again, Tesla is a manufacturer. I just want you to see, it's not to talk down on Tesla, it's just to show you the scale of the cash that Nvidia is generating. It's really hard to imagine unless you compare it to other companies. The money they're making is absolutely insane. Now you would expect that, okay, well, if we're generating that much, certainly their costs have gone up, like what they're spending on selling and general and administrative expenses. Those costs would probably skyrocket, right? No, they didn't. In fact, that's what's remarkable. Their costs on research and development were up a whole whopping 45%. Their costs on SG&A were up 15.8%. Their total OPEX was only up 39%, while their gross profit 4x'd. There is no question this company is a cash flow machine. They are cranking growth, and it is no surprise the stock is now at $1,000. Not only did they announce a 10-for-1 stock split, but they moved their dividend from 4 cents to 10 cents. That means the future share will have a 1 cent dividend. See, 10 cents divided by 10, get it? Because we're doing a 10-for-1 stock split. That means at $1,000, you get a 10-cent dividend. That'll be paid out June 28th to anybody who holds the shares as of June 11th. You'll get 10 cents on a $1,000 share, or you'll get 1 penny for 10 shares at $100 a piece, depending on obviously what Nvidia is trading for at that time. Remember, stock splits don't change any of the fundamentals for the company, but they do make the stock psychologically more affordable. A lot of people don't know about fractional trading, so oftentimes people think, oh, when a stock split is announced, that means the stock's going to go up. And oftentimes that can be true. But this video isn't about analyzing stock splits, it's about telling you about the fundies, the fundamentals. So understand Wall Street's forecast here. Wall Street is forecasting $25 of earnings per share for the year. This pretty much aligns with Q1 anyway, because if I just take their diluted EPS and multiply it by 4, so I annualize it, I get about $24 of earnings per share anyway. Now, the problem is Wall Street's forecasts for Nvidia right now are not that great. Next year out, they're only forecasting earnings to grow 24%. The year after that, 10%. The year after that, 8.8%. The year after that, they're expecting earnings to shrink by 3%. The reason is at some point the S-curve of growth slows and you hit that flatter side where you're no longer able to sell $7,000 H100 chips for $35,000 because there's a huge shortage of chips. This is why Nvidia is now getting onto a cycle of chip refreshes, which they expect will be very rapid. They expect to have a new H100 style chip basically every year. I mean, we already went from the H100 GPU to the H200, that's the Grace Hopper 100, to the Grace Hopper 200. Now we're waiting for Blackwell. Blackwell is ramping in Q2, that's now, mind you, so we're manufacturing Blackwell right now. We're expecting Blackwell to start shipping in Q3 and be installed and up and running in Q4. UBS analysts via Barron's suggest that the Blackwell chips will actually be functional in December, a little bit later than the October previously expected, but still this year. And Jensen suggested there will be a lot of Blackwell revenue that the company will be able to recognize this year. So that's a good thing. Something else that's really good is not only do they expect to have new chips every single year, it's kind of like going from the iPhone 14 to the iPhone 15, and hopefully you get massive performance enhancement. Like, for example, Blackwell compared to H100 is supposed to be able to perform 4 times as fast in a more power efficient manner. But at some point, we're probably going to get to that point where we're like, what's the difference between the iPhone 14 and 15? Oh, not much. And I think that's what Wall Street is starting to try to snuff out. It's like, once we have this revolution done, what's the forward growth? And the average forward growth here is only about 10% on earnings per share over the next 4 years. Now, the cash flow is still massive for the company, but at the valuation, you now push the company to a 4 peg, which, since they're a designer, you could say maybe they should be worth as much as a SaaS business. Maybe. I don't know if you could do that because you don't really get recurring revenue. You have to sell that product over and over and over again. So, which maybe once you get people into the system, you could say that. But still, 4 peg price to earnings growth, little on the pricey side for the valuation, but that has not stopped the stock from skyrocketing, again, to roughly $1,000 at the time of this recording. Although you could see it did drop after earnings right back to that 969 line. Now, I'm a big fan of drawing lines and technical analysis. Today, we traded Enphase. I sent alerts on Enphase trades. I don't guarantee you can make money with these trades. I don't promise that they're always going to be functional or that I'll always make money. But let's just say this year so far on $1 million trading account, I'm up over $800,000 in realized profits trading. Just today, I'm up $84,000, and I traded $15,000, $35,000, and $50,000. So basically, even if you added that all together, it was a rough double today, which is really, really cool. So knock on wood that continues. But my whole point of doing these exercises is to train you and teach you how to trade yourself. So you could set the lines yourself, so you can deal with your own psychology of trading. That's why we have the program called Stocks and the Psychology of Money. So if you're interested in that, send us or check us out at meetkevin.com. At meetkevin.com, you'll also see the link for our event that we're doing next month if you're interested in that. Next coupon expires on May 31st, and then our price will be going up. That also comes with lifetime access to those alerts. It's a one-time payment, course member live streams, all the lectures, and if you have questions, email us at staff@meetkevin.com. Now, something else that was really interesting about NVIDIA's earnings set was their discussion on automotive. So they had a 17% jump in automotive revenues. And those automotive revenues were driven by self-driving. This is what they told us in the earnings call. They said year-on-year growth was driven by self-driving technology. And a lot of people look at NVIDIA and they say, well, how is NVIDIA going to have anywhere near as much success as Tesla in full self-driving technology if they don't have as much data? And so what I did is I went through the slideshow of NVIDIA's webinar on artificial intelligence driving and training of artificial intelligence systems. And really what the company does, as you can see on screen here, what they basically do is they do a lot of work with simulations. So they collect a small amount of data, and then they use simulations to basically 10x the size of that data and really work out those edge case scenarios, not on the road with drivers, but in the NVIDIA software stack. And so they pitched that you could use the NVIDIA DGX Cloud, a serverless AI SaaS platform, basically, so that automotive companies can basically train their models substantially faster than competitors. And they do a lot of this training virtually. Now, I have no idea how successful that actual kind of simulation and training is, but they argue that it's actually better than real world data because you can really cycle those edge case scenarios over and over and over again. And something that I've always wondered is, what happens when you put a Tesla with a driver in a rough situation? Well, the driver just takes over. It disengages, and now you have to use the driver actually driving, and you kind of lose the car trying to learn, right? Because the driver took over. Whereas with simulations, the car could crash and then learn, oh, don't do that. Now, in theory, you could basically say that a driver takeover is kind of like a crash, but that doesn't work well either, because sometimes just to turn the system off because you want to go a different direction, you take over, and that could send some red flags to the training system. So this is interesting. I don't know how much of a competition that's going to be, but I know that their revenues are blowing up at Nvidia. And this is going to be a competitor for companies like Tesla in the future. An interesting chart here as well was that they chart that cost for training autonomous vehicles, AVs, goes up over time rapidly, while progress flattens out substantially over time. I found that to be very, very interesting. So very cool. And so they talk about edge case scenarios for finding the most critical scenarios to test. So real driving to find the edge case scenarios, and then using those edge case scenarios to run over and over simulations on. Very, very interesting. Now, there's this company called Vertiv that a lot of people have gotten very excited about. I think the ticker on that is VRT. And a lot of people are excited about investing in VRT. I'm not exposed to it. No, none of this is personalized financial advice, obviously. It's just education and perspective. But a lot of people are interested in this. It's a smaller company that provides liquid cooling exposure. Blackwell is a system that can be cooled either with air cooling or liquid cooling. And so a lot of people are looking at Vertiv stock as a potential here. I think the valuation, the expectations are a little high on Vertiv's growth, that they're going to grow earnings per share by 25% year over year for the next 4 years after this year. I think that's a little rich, and their margins are pretty low, net somewhere around 10 to 13%. Not anywhere close to the crazy margins that Nvidia has and the cash flow Nvidia has. I mean, frankly, if you look at the revenue that Nvidia has, we can just look at it right here. We'll go to the iPad quickly. iPad, we'll go to the income statement. Here it is. Yeah, just look at the margins here. So first of all, on gross profit, the gross profit margin at Nvidia, it should be like 76%, if I got that right, 78.3%. And their net income, $14.881 billion into 26 on Rev, puts you at a 57% net margin. They make 5 times as much money at the bottom line than a company like Vertiv on a margin basis. So it's kind of like you made $100, you kept 57. That's amazing. So that's why Nvidia is so popular and people love it, and people are looking for the next Nvidia, but the next Nvidia might be Nvidia. Something to keep in mind is they really only grew about 5.4% between Q4 and Q1, but Q4 is usually a big quarter, so growing off of Q4 is actually pretty big. And they're forecasting 7.69% growth into the next quarter, which is pretty good. I mean, that's fantastic growth that this company is pulling off. A lot of folks say that's already priced into the stock, though. Okay, continuing on, we've got Nvidia talking about how they helped Tesla get to 35,000 H100 chips. Blackwell is in full production. They're releasing the next version of Nvidia Drive Thor, powered by Blackwell, when it comes out, which will replace Orin, and companies like BYD and Xpeng in China are expected to use that in production vehicles starting next year. So you could have full self-driving competition from Nvidia as soon as next year, assuming their simulation-based approach works versus the Tesla real driving approach. Although I think Nvidia uses a combination. It's both simulation and real driving, which Tesla does as well, but obviously there are many more Teslas on the road. Then we got some comments on how China has gotten a lot more competitive now due to the limits on Nvidia technology, and really, revenue from China has become less important for a company like Nvidia anyway. The biggest excitement obviously came not only as a result of Microsoft announcing Copilot plus PC as a way to sort of reinvigorate PC sales, because Nvidia also saw GPU sales going down for desktop workstations. That's a fancy way of basically saying, hey, yo, there are more layoffs in finance and tech, so less people are buying computers. Microsoft plus Copilot might sort of accelerate some of that RTX adoption again and help Nvidia get out of that PC recession, so to speak. But really, this has become a fraction of their income anyway, and it's really these server chips that are moving big. Now, something else that I was worried about was the inventory buildup for Nvidia, and if they would take any kind of inventory write-down. I did not see anything to indicate that there was an inventory write-down on the value of H100s. So I think that fear is reasonably allayed for now, unless I've missed it. And their inventory did actually grow by 11% year over year. I'm sorry, this is quarter over quarter. Yeah, quarter over quarter. Inventory grew 11%. So I'm not really seeing any kind of inventory markdowns or write-downs on Nvidia due to, fear over more price competition for the H100s. I do see price reductions on companies like ASA that sell these chips, or on eBay. You can get these chips for like 28 grand now. Still a significant premium over the 7K that they should probably be retailing for. But they're getting it because there is demand for them. And why Amazon didn't want to buy more H100s and just wait for the Blackwell does somewhat signal a little bit of a slowdown in AI demand, but not from a company like Snowflake. Snowflake had 128% net revenue retention, 485 customers with 12-month revenue over $1 million each. And quite frankly, the numbers were really impressive at Snowflake too. I posted them over here. You can see them at ehack.com. 34% growth on gross profit, 21% growth on sales and marketing. So you had gross profit grow more than sales and marketing. And they are still losing a lot of money. And a company like Snowflake was the sort of big data before AI, I wrote. I believe that, obviously. They worked with big data. That's always what they've been about. And they beat forecasts, so they did well here. Stock's only up about 3.8% in afters. But these are the companies that are really going to be operating and using the server solutions that NVIDIA provides. NVIDIA suggests that if you spend $1 on an NVIDIA chip, you should be able to earn about $7 in API revenue over the next 4 years. I think that's a little bit of a lofty expectation, especially since they gave a shout out to Stable Diffusion. The company that runs Stable Diffusion is called Stability AI. And I actually wrote a piece on ehack.com about how Stability AI is not actually stable per the information. They raised $101 million at a $1 billion valuation in 2022. They did make some money, but then all of a sudden the CEO resigned. Now the 180-person company might be sold. They have $100 million in bills to pay, and they had a net loss of $30 million in Q1, and they might be out of cash. So in other words, the company that created Stable Diffusion, which is known for image generation, I put a little explanation here. I'll try to give a very brief explanation of how Stable Diffusion works. But the point is, the company that created this might be going bankrupt. Now, that's not to say that the technology will go away, but it just shows the challenges of actually earning revenue with AI versus how easy it is to sell AI GPUs, frankly, to companies that could use those AI GPUs. Stable Diffusion, quickly, basically what it does, and this is very, very annoying and complicated to explain, and I'm probably going to screw it up, but I'm going to try to explain it like I'm explaining it to a 5-year-old. It takes a picture of a cat, let's say, or a picture of something. We know it's a cat, and then it adds noise over and over and over again. And it basically makes the picture very, very, very noisy. And the idea is when you in the future type in, hey, give me a picture of a cat, it'll first generate a picture of, okay, a cat should have a noise pattern that looks like this. Now let's undo the noise and reverse the process to try to come up with a picture of what you've asked for. So it's really weird. I'm not going to go into that any further, but this is just an example of how like an AI software company that's basically coding and encoding AI images using AI server stacks is actually losing money despite having a pretty novel concept. So hence why I think, there's some hopium built into those sort of AI software revenues. Now, would I probably rather invest in Nvidia than a software company like Stable Diffusion? Almost certainly. Am I invested in Nvidia right now? Yes, I have exposure to Nvidia, and I'm not short Nvidia. I had no options. I had no plays on this earnings call, but I am long Nvidia. And that reminds me, I gotta thank, again, our sponsor for this video, Coinbase, metkevin.com/Coinbase to learn more about Coinbase, and you can get up to $200 when you sign up for Coinbase. So if you haven't done that yet, check them out, metkevin.com/Coinbase. I'll link it down below as well. And then, of course, check out that Stocks and Site group for my trade alerts so that you can see how I trade. And the goal is to make money. Of course, it is not a guarantee. It is to share perspective, and past results do not guarantee future results. So let's now just sort of look on a TA basis here. First of all, is it bullish that the company is doing a stock split? Yes. Second of all, where are we sitting on the fibs? Well, we're about to move up on the fibs. We're about to break through 1,000, so it's going to put us here if we open up here tomorrow. It is possible that we could get to the fib extension level of $1,116. So if you're looking to go YOLO on this, it is possible that $1,100 calls could be interesting, although it's also possible that you get a sell down on Nvidia tomorrow as people sort of digest what we've heard in the earnings call and in the earnings reports. So this is an overview on this company and what just happened with Nvidia, what just happened with their earnings, and some things to consider. So these are my perspectives. Personally, I probably won't play any kind of longer term YOLOs here. I'm totally willing to hold the stock though. I don't think I'll trim my position on the stock. But if I did, it would only be, to keep it to like buy another opportunity, I thought, or to keep it in balance with a diversified portfolio. You don't want it to get too overweight since obviously it's going up. But other than that, I don't know that there's much of a play for me here. What I might do is tomorrow in trading, I might be interested in trading some of the derivatives, which are going to be basically stocks that move as a reaction to this. Like, for example, ARM or Super Microcomputer, or maybe even Vertiv, but only as trades. I don't anticipate as longs. I don't really like ARM from a fundamental basis. And I don't really care for the manufacturing companies like Vertiv and Supermicro. I much prefer just Nvidia directly over those. But that's my personal opinion. That doesn't make them bad companies. That's just my opinion. Anyway, hopefully this is useful to you. If it is, consider subscribing to the channel. Shout out again to Coinbase. Thank you for being a paid partner of the channel. Check out the Stocks and Site group for those courses on building your wealth and get in before that coupon expires. You do have until next Friday, though, so you've got a little bit of time. So if you have any questions or you want to bundle up, like with our event in Vegas next month, or you want to bundle up for other reasons with other courses, check them out over at meetkevin.com. Shout out to those of you who joined within the last bit here. Andrew, David, Jay, Devin, Luis, Marcos. Thank you so much for joining just within the last hour-ish here. Really appreciate you. There's some others of you as well. I can't pronounce all these names, sorry. But anyway, love y'all. I gotta go. Thank you so much. And now we're gonna play my outro music.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than House Act, nor am I presently acting as a market maker. This line's pretty important if you're watching Bitcoin. You better have it drawn. It's the $69,000 line. We can't keep going back to it. And obviously way up over the last few weeks here. I'm surprised coin isn't up more than it is. And then you've got Ethereum here on enthusiasm over the potential Ethereum ETF, sitting at that 37.64 line, also a pretty critical level. Thanks, y'all. We'll see you in the next one. Goodbye.